Asia-Pacific markets are mostly rising today as China's factory activity for August expanded. The central bank, though, announced a cut in reserve requirements to boost the economy, but also support the yuan, which has been depreciating in recent months. The People's Bank of China also announced on Friday that starting from September 15th, it will reduce the foreign exchange reserve requirement ratio for financial institutions to 4% from 6%. The cut follows a number of reductions to interest rates in the last several weeks in an effort to shore up the economy. Let's now get more on this with Victoria Scholar in London. She's head of investment at Interactive Investor. Thank you for joining us, Victoria. So does China at this point have the economic leadership, the power to manage its way through these problems, in your opinion?
Well, China's leadership has been criticised for discontinuing publishing data on the sharp rise in youth unemployment, which really adds to a sense that it is trying to hide some of its economic problems. But at the same time, it has been taking steps to try to stimulate its economy, such as big rate cuts. It's also been attempting to reduce foreign currency reserve requirements for banks, and it's announced support for its ailing property sector too. It's reduced the stamp duty as well on stocks for the first time since 2008, and it is expected to cut interest rates on mortgages as well. And we know that China has been struggling with a much bumpier than expected recovery out of the pandemic, and then the ongoing turmoil in its property sector. Just this week, one of its real estate companies, Country Garden, reported a record first half loss and actually warned that it could default on its debts.
Right, Victoria, to what extent, though, can China keep supporting the currency, the yuan, without creating further problems, such as real imbalances in the economy at this point?
Yeah, well, that's right, because on the one hand, China wants to boost its economy by carrying out supportive policies such as monetary stimulus like rate cuts, but this tends to have a dampening effect on its currency, which can provoke other issues like making its imports much more expensive. And there's the risk of capital flight away from China, where investors take their money elsewhere. And a weak currency also can send a bit of a bad signal because it can kind of symbolize a lack of confidence in the economy. But on the other hand, a weak yuan can actually have some benefits. It can boost its exports by making them cheaper on the international market, for example. But some are estimating that the yuan could actually hit a record low this year because of the bearishness towards China's economy at the moment. So Beijing is trying to encourage more buying of the currency, as well as Chinese equities too, to try and boost confidence in the world's second largest economy once again.
Victoria Scholar, thank you very much for this update. And now let's go to other top stories from around the world. Moody's has revised Turkey's economic growth forecast for 2023 to 4.2%, up from 2.6% in its May outlook. The upgrade comes a day after official data showed GDP expanded by 3.8%, beating expectations. Last month, the rating agency also said Turkey's credit score could be upgraded if the country continues its mainstream economic policies. The US is offering a $12 billion grant to automakers and their suppliers to produce more electric and advanced vehicles. The funding includes a $10 billion loan for clean vehicles and support for projects within established automotive manufacturing areas. The decision comes amid negotiations between the United Auto Workers Union and auto companies over wages and benefits for workers in the EV sector. And retired Brazilian football star Ronaldinho has denied allegations of ties to a company accused of a fraudulent crypto scheme. Ronaldinho testified at a congressional hearing denying his involvement with the company 18K Ronaldinho, saying that they misused his name. The company promised 2% daily returns on crypto, but is now facing a lawsuit seeking $61 million in damages.